Okay, Mikhail, thank you very much for the introduction. You've saved me the roll call, which was one of my main tasks. How easy can you make it for somebody to chair this? I'm Chris Leslie. I'm the Chief Executive of the Credit Services Association. We are the sort of trade body, the club of companies, but very specifically focusing on collections and the debt purchase sector in the UK. And so naturally, I guess, you twisted my arm to come and chair this particular session. How can collections teams prepare for arrears driven by higher interest rates? The interesting thing, of course, was that our sector was very much, after the pandemic, braced for, especially when the pandemic started, for real difficulties to come. Everybody was watching that tidal wave. And then I don't think it's unreasonable to say that actually it didn't quite hit in the way that people were expecting. And that might be for a number of different reasons, possibly because actually some of the credit decisions that were taken in recent years were much more carefully calculated than perhaps was the case before the global financial crisis. And so actually the amount of potential non-performing loans or arrears that might have mounted up were not quite as significant as they could have been. But nevertheless, a lot of customers have found this period very, very challenging as inflation has gone particularly high. The cost of living pressures have been very acute. And of course, now we've seen with central banks adjusting monetary policy so that interest rates clamp down on that inflation, the costs have started to filter through, and those priority debts start to squeeze and perhaps collections in other areas. So we've got a great panel to talk about what's happening in the sector, and Mikhail's already done the running order. So maybe if we start off and just do a little quick stock take of what's actually been happening in the economy in recent years, and why don't we go sort of clockwise, as it were, in this. So Mark Bruckshaw, do you want to kick off and just give us your take on what's happening in terms of repayment rates, state of delinquencies and those kind of things? What's the real situation out there?
Yeah, so I think you've covered an awful lot of it in the introduction. I think there was a real fear in the height of the cost of living that delinquencies would spiral out of control, and we've seen gradual increases, but nowhere near what was feared. I think from our own recoveries management business as well, payments have pretty much held up. I think, and we'll touch on this a little bit more, I think, but I think it's more consumer behaviour, and they have changed their behaviours to sort of manage and show remarkable resilience. Mm-hmm. And I think part of what we'll discuss today as well will be how we can help them, because I think there is an awful lot of stress still in the system, things like council tax going up everywhere, fixed term mortgages. There's an awful lot, I think it's 1.5, 1.6 million fixed term mortgages that expire this year. So there's a lot of built up stress in the system, but so far consumers have managed that.
Yeah. Hardev, what's your sort of understanding from Revolut's point of view?
Yeah, so just to reiterate what Mark said there, we've seen a minimal spike in delinquencies, not what you would have expected, but obviously due to the higher interest rates. But we remain vigilant about the impact of the cost of living, interest rates, and especially related to mortgages that are coming due in the coming year in terms of the impact on our customers.
Yeah, absolutely. Yeah, and Gavin?
Yeah, sure. Very similar to Hardev and Mark. Aldermore's a secured lender, but we have seen our property portfolio had seen a rise in arrears there. Typically the first debt to be paid and the last one that goes into arrears, but we have seen our delinquency increase in the mortgage sector. But again, really good resilience and from our customers and a strong commitment to pay. And certainly the rise is way below the worst that we feared.
Yeah, absolutely. Okay. Michael, I mean, obviously more from the technology sort of point of view. I mean, I guess we've all been watching what's been happening. Any thoughts?
Well, everything that my colleagues here have spoken about is true. There's a lot of pressure in the system right now, and there's really two different things that we're seeing. We're seeing one which is proactive reach out, trying to work with consumers to understand the level of pressure that's out there and help them plan effectively for things like a mortgage that's going to change rates and have a fairly abrupt impact right away. And then on the other side, it's really about, how do we make sure, how do we monitor the external kind of inputs to the system that represent perhaps the straw that can break the camel's back.
Yeah.
A precipitous drop in consumer spend, any sort of layoffs or employment interruptions, things like that, which could, create kind of a snowball effect. And that's really where a lot of folks are reaching out and trying to understand that war game planning, to be prepared.
And of course, in lots of, it's not just a UK issue. This was something, you were sort of seen in the US or Canada or elsewhere. How are consumers, how have they changed their behavior to sort of cope with as housing costs kind of rise? What are they doing? I think it was your point when we were talking earlier about side hustles and earnings on the, from the gig economy and those kind of things. Has that actually been the case?
We've seen a lot of it, and in particular, Canada is in a very similar situation. Their mortgage roll rate and moving from a variable to a very much higher variable rate is going to be a big impact. And this is the first situation where we've seen the middle group of the credit spec, not the near subprime, right?
Yeah.
But the solid earners that are in their 40s, 50s, 60s that have always been kind of the ballast in the system because they have a lot of debt, but they're very responsible and reliable.
Yeah.
Oddly enough, for the first time ever, when someone who's in the lower income spectrum loses a job, they can make up good percentages of that in the gig economy. Their flexibility, the things that they can go do to recoup some earnings is changed with the gig economy. And it's very much, a much larger challenge for someone who has been a career journeyman or something like that to go ahead and offset the level of income that they might lose in a job loss. So it's a very interesting dynamic. And we're seeing, I don't know if you're seeing it specifically in your portfolio, but, in that sub or near prime risk area, we are seeing impact that's much more volatile, but we're also seeing a recuperation of funds at a much faster rate without replacing the job that they may have lost. So it's there and it's helpful, but the one that we're really worried about is that middle group that has.
Yeah, I suppose the sort of typical professional 9-to-5 salaried earner who hasn't historically had to cope with this level of cost for housing within living memory, that sort of thing. But yeah, I don't know. In the pandemic, of course, Gavin, we saw savings rates go quite high because people weren't going on holidays and all the rest of it. But do you think that's sort of diminished quite significantly now? How are people making up, what's happening to their resources?
Yeah, no, I think from our point of view, we're definitely seeing people manage their money differently, which I think we'll come on to, and definitely making some different lifestyle choices that they weren't before. But you're also seeing a couple of other impacts in terms of the big impacts in terms of finances are obviously inflation, but then interest rates and coming off fixed rate mortgages and moving on to variable rates and very much a difference in payments. And we're seeing people more proactive than they were before. One, looking at what different interest rates they can get and going on to different fixed rates, or even managing their assets differently. So from a buy-to-let portfolio point of view, sometimes selling those assets and being proactive there. So very much different lifestyle choices.
And do you think customers are pretty savvy? Do they know? There was always this issue about financial education and whether people. I suppose if you're really overextended, you do the research and figure out, well, what are my options? But not everybody does that. That might seem a rational response. Do you think people are more aware of their choices?
Certainly more aware, but still need guidance and advice. So certainly more aware, but I think the thing we see more is more proactive. Certainly not afraid to reach out as much and ask for help and look at the different options. So yes, more aware, but certainly more proactive. And I think some of the media has a big impact on that and driving some of that contact into ourselves, which we welcome.
Yeah. And how do Revolut's customers?
So just picking up on the point earlier around customers who have potentially never found themselves in a situation where they need to consider, prioritizing their priority bills and discretionary spending. They just didn't have to, but because of this cost of living increase, they're having to prioritize. I think I said when we met earlier about Maslow's hierarchy of needs, they're prioritizing shelter, they're prioritizing their kids' clubs, which was something that was mentioned in one of the earlier sessions. And then not previously having the need to worry about how much interest they're earning on their savings or, whether the money was sitting in their current account because interest rates were negligible anyways. So I think there is more knowledge in the market from consumers around, where can I earn the most on any money that I do have sitting there and trying to make the most of it.
Yeah. Has TDX, Mark, sort of found any particular trends in terms of how, what's happening with sort of consumer tactics and how they're coping? What's your...
I mean, I think from a recoveries management perspective, the payments are holding up and balances are pretty stable with the exception of utilities, which have risen, but that was obviously a direct impact. And then also from the Bureau as well, we can see that there's been a 10% increase in the number of people with 90% utilisation or greater on their credit card. So there is undoubtedly that stress, and people are sort of really pushing the boundaries of any sort of headroom that they've got left. And I think picking up on the education piece, something that a bit of a shameless plug for Equifax's financial health report, but I think there is more as an industry we can do. So there's £23 billion worth of unclaimed benefits out there.
Yeah.
So we're talking to a lot of clients at the moment around how we can educate customers and put that really in front of them to help the circumstances.
Yes, yeah, absolutely. I mean, Gavin, in terms of when your teams speak to customers, maybe need to offer forbearance or support, I mean, how early in the process of distress are you able to engage and have conversations? Or are you literally waiting for people who've had their heads stuck in the sand for a long time? What are you doing to kind of reach out and engage?
Yeah, no, sure. So we do have a pre-delinquency strategy and policy. So we will engage with customers even before they go into arrears. It's something that's obviously important to us and help support customers. So, for example, we can see through bureau data where customers are potential high risk through some of their other credit file activity. Or certainly, again, as I said, we're a secured mortgage lender, so we can see when people's fixed rates are going to come off and the variable rates and what's likely to happen to their finances. And we will reach out to those customers and try and support them. We will even offer forbearance or different tools, again, pre-arrears. So, for example, from a mortgage space, if somebody's payments are going to increase, there's different things you can look at. Increase the term, for example, and that will reduce their payments despite their interest rates going up. So when we reach out, even before customers potentially go into arrears, that's something we'd look into, and obviously we'd support them through if they do fall into arrears.
Yeah, I mean, Hardev, I was going to say, in terms of Revolut's sort of customer relationship, that early stage engagement, how able are you to do that? Because it's a different situation than if you're a mortgage lender, I guess.
Yeah, so we're trying to make our forbearance solutions as seamless as possible. We're building self-serve, so customers will be able to go on, push I'm experiencing financial difficulties in the app. We will ask the questions in the form of a questionnaire, just like we do when we're granting credit. So our philosophy is we want to make it as easy for somebody to get forbearance when they need it as it was for them to originally originate the credit product. And they can do that 24/7 independently at a time that's convenient for them. They don't need to speak to anybody. Within 24 hours, they'll have a decision or options that are given to them.
Yeah, I mean, sometimes people don't want to have conversations. There's a stigma attached with these things, as we know. But other times, people do want a human, common sense conversation.
And just going back to the point earlier around that kind of professional person who's potentially never had to be in arrears, a lot of the language in the notifications, I heard it again in another session, but just, making them aware that we're there to help, right? And they can reach out because they've probably never had to before.
Yeah, absolutely.
Yeah, and we're working with an awful lot of clients at the moment around digitising that forbearance conversation. I think more and more people are looking to expand, similar to what Hardev said, around how much they can self-manage online. I think in our recoveries management business, so even a long way down that life cycle, sort of 70% of customers are interacting online, and I think that's where most companies will move to over time.
We're, at the CSA, we're doing a piece of policy research of our own currently, including some opinion polling, to get underneath customer fear and anxiety about debt. We know that for a long time, all of us are always imploring or encouraging customers to engage, pick up the phone, etc., have a dialogue. But do we really understand the psychology of quite where that fear comes from? And so, yeah, we've got some interesting polling sort of due out over the next few months on that one. But I don't know, Michael, whether sort of technology offers some insight into this. I mean, people have been talking about open banking and other tools that are available, but is that really applicable in collections?
Well, I think it is. I think if you look at the common consumer today that's just getting to a credit consumption age, the willingness for them to actually share their financial information has been more positive than it ever has in the past. A lot of the stigma that we're talking about is attached to the privacy of finances, and that really stems to kind of generational views on ownership of money and liquidity. As you look at the opportunity to work with people proactively and give them an incentive financially to share regular routine updates about their income and expense, which is readily available from a technology perspective today, you can immediately detect activity. You can immediately detect changes that are moving in the wrong direction. You can also measure their general financial health and wealth approach. So you can plug them into available resources early before they ever reach delinquency, but you can also have a projection of how much time you have should they lose a job or should they suffer an income or an increased expense situation, so that you can immediately intervene. And when it comes to forbearance, one of the things that's really important is to remember that life events happen. It can take a little time to get back to where you were, but our forbearance programs oftentimes are very Boolean. You're active, you're on forbearance, forbearance ends. We need to be able to provide a much more gradient view of how to work with them and help them get that path to health, supported in financial terms.
Yeah. In a moment, we'll see if there's any questions that you want to put to the panel and raise. So if you do whatever you need to do with your phones and the Slido app, if you could think of a question and we can kind of have a bit of audience interaction, that's always quite a good thing to do. So I'll come back in a second on that and challenge you on that. I may even pick on a few people. No, I won't do that. But please, Slido questions would be quite useful. Next steps in supporting customers. Okay, so we know that the FCA have got consumer duty. Oh, we've got some questions. This is great. Consumer duties kind of come along, but do we think that our sector is understanding and really engaging with some of the vulnerability issues that are out there right now? Because the vulnerability policy is also quite a lot under. There's a lot of scrutiny on that. I don't know, Mark. Do you have any thoughts on?
Yeah,
I
think it's an extension of what I mentioned before, really, that there is so much data out there that people can use. So there's always going to need to be the ability for a consumer to declare non-financial vulnerabilities. But from a financial perspective, the kind of things we spoke about already around is the mortgage fixed rate coming to an end? What's the card utilisation of the payments? You can see all those and build it up. And I think the interesting thing in the current situation we've got at the moment, if you look at some of the step change insight from their annual review, is there's an awful lot of people who aren't having those life events now. It is that real steady build-up. Yeah. So having those customer-centric digital strategies to reach out based on that data, I think, is vitally important. Yeah, yeah. And Revolut's sort of customer strategies in terms of understanding vulnerability, have you encountered that much in terms of your customer base?
So specifically about vulnerability, we have models to detect vulnerability. So we use a number of different variables from within the app and the customer behavior to identify it. And then if we do, we can reach out. Yeah.
Okay. Yeah. And Aldermore, presumably, again, I don't know whether there's a sort of consumer duty sort of cut across on this side of things, because obviously there's the annual reviews coming up and everybody's thinking about what to put in those documents. So yeah.
Yeah, sure. No, we have specialist vulnerable support teams at Aldermore, so in each of our lending areas. So it's something that's really important to us. For me, I think it was interesting just touching on what you just said there, Chris, around survey and making sure that why are customers not reaching out? And from our point of view, from a vulnerability, we're trying to look at, are we giving as good service to our vulnerable customers as our normal customers? So, for example, we do outcome testing, right. But we look at our outcome scores for our customers versus our outcome scores for our vulnerable customers as well, and seeing that, are we really making sure that we're supporting them through the specialist support they need? So for me, that's key, and really, it's great that we're offering all these different types of support, but are we actually giving the right service, and are our customers understanding that? So that's what we're moving to. Yeah.
So Michael, we're going to start with you on the Slido questions, because the top one on the list here definitely is for the digital guy on the platform. here. Can a digital-first strategy truly gain insight from a customer and get to the heart of potential issues? So I guess this is, I mean, if I'm honest, I have prejudices about speaking to bots and non-human interfaces, and whether when I sort of try an interface, can it properly understand and give that level of empathy and support there? So tell me my cynicism is misplaced.
Well, so the cynicism around talking to a non-human entity and trying to have a conversation where your expectation is that it's just like you and I on stage is definitely going to always lead you astray, just in the current ability to get to where you're trying to go. But this question can speak to kind of digital adjacency.
Yeah.
Understanding the heart of somebody's issues and trying to tease that information out of them doesn't have to become a conversational activity. Across a series of touch points, you can kind of identify vectors that are leading you to, whether it's an expense issue, whether it's a job loss issue, whether it's just the financial pressure that's getting to them. And then there's tools and other things that are available so that you can send links, see if they've utilized those things, and when they come back, now change the vector of communication to go ahead and use things like machine learning or other intelligence repositories to really get to the bottom of what their challenge is. They may not want to share that with you voluntarily, but they're happy to let you vector into what that is and then react and adapt in a way that I think can increase the ability of outcomes. So if you're trying to get to that conversational component, probably still fairly aspirational. If you're trying to get to the root of the problem in a way that is, very disarming, I think that's absolutely possible today.
And what happens if I'm a Revolut customer or an Aldermore customer and I want to get through to a human being, or actually, am I quicker if I use your tech interfaces? What's struck you? I mean, what tactic have your companies taken in that regard?
Yeah, sure. So you talked about consumer duty and the dashboards and reports back. One of the measures we have in there is around, are we servicing all our customers? Are we meeting the service levels and commitments and answering their queries in a reasonable time? Are we answering the phone? And those are key measures for us. So is it quicker online over the phone? No, we answer every call that comes into us, and obviously if a customer interacts online, we're just as quick. So I think you need the balance. Some people want to interact online, some people do a little bit of both. I think both's important. Really, at the end of the day, it's trying to support the customer in the way they want to be supported through their channel of choice. So to me, it's having that right combination.
Yeah. Similarly?
Yeah, for customers who prefer to interact kind of independently in their own time, they can reach us 24/7 by chat. But if a customer does need to speak to us on the phone, they can.
Yeah. And I don't know, TDX-wise, do you have a particular view on this one?
Yeah, I mean, I think that the choice piece is the key there, that your digital strategy and your call center needs to be absolutely joined up, both for an agent to be able to push somebody into a digital journey to put information in at their own time, but also for if somebody's in a digital journey to easily flag that they need human interaction to resolve that. So it is all about choice.
There's a couple of other questions that we've got here. Good old Labour policy on school fees there's creeping in indirectly with the individual whose mortgage is going up, school fees expected to go up. A lot of people facing significant potential costs. Who knows what other taxes are going to go up? We just don't know. But that's another story. But yeah, I mean, to what extent can collections teams actually, do more to be proactive and to notice the environment, maybe pick up the data that you have about your customers and say, actually, these families are going to be facing particular pressures? I don't know, Michael, do you want to?
Well, that's a tough one when you're talking about going out and kind of seeing that somebody has school fees and they're expected to go up. There's that use of data that comes into question whether you've gone too far. And
what an amazing bank that would ring me up and say, we see that your kids.
I bet you're worried.
Yeah.
I don't think that would be an effective use. I think that would probably go too far. But I think that there are ways to begin the process of notification. And if you have enough sensory endpoints where you can tell that they've read a piece that talks about 20% and you can see their reaction, then you can potentially go ahead and get the information you need to inform the collection teams about what they need to do. But you have to be very careful with that. When you guys look at the use of data or information, I think there's always that line that you have to be very careful about getting over, because it goes from useful to invasive, I think.
Yeah, absolutely. Yeah. A couple of questions very quickly on how collections teams have changed their practices. I mean, there's a world of difference between, say, council tax or HMRC and wherever, which is still, in my view, public sector particularly, very much in a kind of demand and enforce mode. Whereas I think in financial services, it's much more about, that we've talked a lot about the language of engage, resolve, help resolve problems. Any other particular changes that you see on the horizon in the collections sector, in particular, the tactics that have been deployed, Ardiv?
So we use an outsourced collections model. We don't have internal collections teams, but we make sure that our partners have agents who are empathizing with the customer situation, that they, even if they haven't been through these life experiences of having a property and having their interest rates go up, that they understand what the impact of that is on the consumer.
Yeah.
Yeah, I mean, to me, the basics are so important, making sure you're adequately staffed up in your collections teams, making sure you do understand the customer situation, making sure you do give them an appropriate solution. But one of the things we really focus hard on is not just the situation now, what their situation is going to be in the next 6 months or year or 2 years ahead, because ultimately if you want to try and help resolve that situation for you, best for yourselves and the customer, you can't just look at the here and now, you also have to look at what's likely to happen in the future. And so when you look at the question around the mortgage payments going up, if we know the mortgage payments are going to go up in 9 months' time, we can't set an arrangement just up on what they are now, but you also have to predict that future. And so it's a difficult job in terms of you've got to look at that lens now and the future as well. So it's just being a little bit more creative and understanding.
We've got 2 minutes left, which gives you each 30 seconds to answer the final question, which is to give one prediction of what you think will be a big policy debate, a big issue, particularly as it affects people's ability to pay in the collections sector, maybe over the next couple of years. What is it going to be? I mean, I know we were talking a lot about housing costs, for example, but what one issue would you say the audience ought to keep on their dashboard?
Yeah, I mean, I'm not pretending to be Mystic Meg with this one because we speak to a
go.
lot of clients, but I think we touched on it. The vast majority of clients we speak to, that digitization of collections and customer management and bringing in more and more of the assessment of vulnerability and how they can put that support mechanism around. I think that's where most clients are looking to invest and to move forward.
Right, that's a good point. Thank you. Ardiv.
Yeah, I'd answer it a little bit slightly differently. So I think we're optimistic that with the cost of with inflation stabilizing and interest rates potentially on the decrease, that we're hopeful that we'll see more stability for consumers. Elections coming all across Europe. Hopefully that'll provide some stability as well. But yeah, I can't sit here and try to predict the future. It's too challenging.
It's always tempting, though.
Don't ask me who's going to win the
I'm going to
Euros.
ask Gavin to predict the future. Go on.
Scotland.
What would you say we should watch out for?
I think just for ourselves, a biased answer on Aldermore, we are a secured lender, and whilst interest rates are likely to come down slightly, they're still higher than they were before. And customers are still on fixed rate mortgages and will come off over the next few years. So whilst the economy will improve, customers are still going to experience stress. Mortgage payments are a big part of their outgoings, and whilst those are going up, even though the economy is improving, we still have to remain really vigilant. So that's something we're acutely aware of.
Final thought, Michael.
Well, I think just a little bit different tech than everybody here. I think that we're going to see demand for consumer liquidity increases to offset their debt exposure. So, I think we're going to arrive at a place where there's a certain amount of debt that can be issued or credit that can be issued, and there has to be an offset. And to get above that, you have to continue to increase that offset so that there is a little bit of a kind of a levee that can prevent the flood from happening given the conditions that are going out there. Probably just a continued extension of, consumer protection and those types of consumer duty related activities.
That's
but
very
I think it's definitely something that's been out there for a while, but it's probably going to get a little bit more teeth now.
Okay, great. Thank you very much for your responses and answers, and thank you for your time today. Thank you very much, panel.